Hey guys, Business Shifu here, and today we are going to be looking at this Zoom IPO that happened today. Basically, two companies debuted on the market today. That's Zoom, ticker symbol ZM, and Pinterest, ticker symbol PINS. Now, Zoom is a sort of multimedia video conferencing company. You might not have heard of it because it's more of a thing that's marketed to businesses, but think of it as it's kind of like Google Hangouts, but it's used more by businesses. And Pinterest, PINS, obviously Pinterest, you probably know, it's a social media website, particularly focused for sharing photos. Now, Zoom really soared today with its IPO, totally beat out Pinterest. But first of all, I want to share with you something funny. It seemed that a lot of people were actually trading the wrong company. So in addition to Zoom, ticker symbol ZM, soaring, Zoom Technologies, another company called Zoom, which their ticker symbol is actually Zoom, their stock soared too, from $2.65 up to $5, which was almost a $100 increase. And then you can see it here kind of tapering off as people realize they'd bought into the wrong stock. And it comes down to a level just below market open. And, you know, I'm wondering, perhaps some people were opportunists. They traded this stock on purpose because they thought that this might happen. And some people who sold out could have been existing shareholders who just discovered they got 100% gain and were like, screw this, I'm getting out. And I'd be interested to know how many people who bought that stock today are now kind of locked in because they've lost, you know, 50% of their investment, and they're just going to wait for the stock to go up now because they don't want to lose their money. You know, anyway, obviously terrible if that's you, and I'm really sorry that happened to you, but it is kind of amusing. Anyway, let's go back to talking about Zoom. So Zoom stock today soared over 80%, and they hit a valuation of $16.7 billion. Obviously, they're fluctuating around there now, but at I think at the high point it was about 16.7 billion. Now let's have a look at the chart for PINS, Pinterest. So they had a little bit under a 25% gain in their stock price from market open today, and they hit around a $12 billion market capitalization. So you've got 16.7 billion versus 12 billion. So Zoom actually totally beat out Pinterest, which is quite unusual, because Zoom is actually only about half the size in terms of the revenue they're bringing in. We can have a look at their SEC filings. Zoom, for the most recent year, reported $330 million in income coming in revenues, and Pinterest reported $755.9 million. So it's just half the size. But if you now have a look at their net income, Zoom actually makes a profit, is $7.58 million in profit, whereas Pinterest made a loss of $62.9 million, so basically $63 million loss in the most recent year that they're reporting for in their, their SEC filing before they went public. So I think this really very well illustrates the idea of trading hype versus trading value. Okay, now both companies seem to be pretty well regarded. Okay, Pinterest, it's not Lyft, it's not Snapchat. Okay, they seem to have got it right with their IPO, but they haven't increased in price as much as Zoom, precisely for the reason that they are not profitable yet. And Zoom is a rare case of an actual profitable tech IPO. Okay, a lot of these IPOs like Lyft, not profitable. Upcoming Uber IPO, again, not profitable. Uber have even said in some of their filings and some of their statements to shareholders and stuff that they may never even be profitable, which is crazy. And it just means a lot of these companies are trading on hype alone. And that definitely was the case with Lyft, because Lyft has a long road ahead of it to become profitable. And if they're competing with Uber and Uber's not profitable, well, if Lyft gets profitable, then they would have to be raising their prices above Uber, which would then lead to people fleeing to go and use Uber instead and bring them back down again and make them unprofitable. So, the whole thing, I think, is a very good lesson in hype versus actual value investing based upon actual facts and figures from the company. Now, Zoom, I've used their service. It is very good. And I think out of these two, if I was going to invest my money in one of them, I would definitely go with Zoom. I would go with the sort of value investing approach. Pinterest, it's a little bit more speculative at this point, but if they have a loss of $63 million this year, if they can start bringing that loss down, and we see that in their quarterly earnings calls that they're going to have to do now because they're a public company, and people start to see that loss being brought down, it is very possible that they could have a good road ahead of them and their stock price will still increase in a healthy way. I'm not saying Pinterest is necessarily bad. I don't think necessarily that they're going to be another Snapchat Snapchat. If you look at Snapchat's stock price, they have decreased a huge amount. They have had a little bit of a recovery in recent months. Now, Pinterest, not necessarily another Snapchat, but it's not necessarily another Facebook either. We have seen that these social media companies can be profitable by doing sponsored posts, etc. And that's kind of how Pinterest makes its money, sponsored pins, okay? But in my understanding of the social media space, it is a bit crowded. You have a lot of companies already very successful and very powerful, like Facebook and Instagram owned by Facebook, and then you have Twitter, many others, YouTube as well, being kind of a social media company too. So it is a crowded space. I don't think Pinterest, just because it's very specific, photo sharing, slightly a little bit of a different way to Instagram, I don't necessarily think that will soar to the heights that we've seen with Facebook. Now, just going back to Uber as well, I think the Uber executives are probably watching this. I'm sure they've been watching the Lyft IPO with a little bit of worry. I think probably I'll end up making a separate video about the Uber IPO closer to the time, just because it is such a huge thing to talk about. I do think the Uber IPO will go a little bit better than Lyft, just because their brand is so valuable, and what you're buying into is a valuable brand. They are in so many areas now, not just ride sharing, but also food, trucking, etc. But they do need to eventually turn a profit, and once they become a public company, the pressure will be on them to turn a profit. So they're going to have to be very careful, and I think they can learn from the lessons from Lyft and from today, the difference in price increase between an actual profitable company and a loss-making company. Big congratulations to everyone at Zoom and at Pinterest, though. Both are successful IPOs. And guys, look out for a Uber IPO video coming up closer to the time. If you're new to the Business Shifu channel, please subscribe, and we'll see you next time. Bye-bye.